right, good afternoon, everybody. Today is Monday, the 20th of November. It's the week of Thanksgiving. So let me give you a couple trades that I believe should be good setups for tomorrow. Remember, big difference between a trade setup and an actual trade trigger, right? So two of these trades, I'm going to wait for the market to penetrate a certain number, okay? So let me go through that. ALSN, okay? As you can see, we're above the 200 simple moving exponential simple. Doesn't really matter what you use. I believe I'm using a simple here. So we're above the purple line, right? And we are in an overall uptrend, right? Yes, we're below the 10 exponential and the 21. That was the closing bell. Market just closed. Look at this. So we have an inside vertical bar, right? We all know what the definition of an inside vertical bar is. It's simply when the high of the current day, right? High of the current day is lower than the prior day's high, and the low is higher than the prior day's low, right? So this is Friday's low, this is today's low, this is today's high, this is Friday's high. So essentially what we're doing is we're contracting, right? So what is normal? After you contract in the market, you will in fact expand. And if you've been listening to me long enough, you know one of my favorite patterns is that inside vertical bar, or whatever you want to call it, right? But we know what the definition of an inside vertical bar is. I just said it, right? High is lower than the prior bar's high, low, higher than the prior bar's low. So let me put a white horizontal cursor. So my buy entry would be 10 cents above yesterday's high on a buy stop, right? So yesterday's high is 39.79. So 10 cents above 79 is 89. So we're looking at 39.89 would be the buy. Now remember, hold on, buy at 39.89, right? Now remember, this potential trade, okay, is null and void if we gap up and open above the high of the day. It's null and void. Okay, so essentially the market needs to open up anywhere. I mean, it could gap lower. I don't care where it opens. All I care about is if it opens above the high, it's null and void. If we open at the close, below the low of the day, it doesn't really matter. Heck, even if it opened up down in here. But it has to trade up through and hit 39.89, penetrate up through yesterday's high by 10 cents. That would be the buy trigger. Now you could buy call options, you could go at the money or out of the monies. It's completely up to you, okay? Again, either buy the stock at 39.89, but remember the trigger is 39.89 on the underlying, okay? And I would go at least 45 days out. Since we're at the 20th already, I'd do January call options. Remember, the trigger is when the underlying is hit at 39.89. That's when you would buy the option. The next potential trade setup, look at this one. CMI, another one, looks just like ALSN. We've pulled back quite a bit, but I still like this trade. Look at this. We are sitting and hovering at that 200 simple, okay? Look at how, I mean, we all know why the 200 simple works so well, right? Everybody and their grandmother looks at that. Walt was printed in the Investor's Business Daily, Wall Street Journal. We are back to that level in an overall uptrend. And if we expand this chart out a little bit further, I mean, look at long term, right? Huge, right? Look at every time well, granted, it's the 1, 2, 4th time to it. First time back to it, bounced. Second time, bounced. Third time, kissed it beautifully, bounced. We're at the 4th time. Could it break? Of course, but instead of just buying it automatically, well, if you're a bit more conservative, you could certainly buy call options here. The January, you go 160s, 159s strikes, okay? But if you want to be a little bit more conservative and you want to take the same trade as the ALSN, you would be looking to buy it above today's high tomorrow on Tuesday, right? Again, we've got an inside vertical bar. The high, right? The high is lower than Friday's high, right? Substantially, right? And the low of today is higher than Friday's low. So we've got an inside vertical bar. You can see that the market's starting to contract, and I believe this is a key level in here. So if today's high, since this stock is over 150, I'd go 20 cent penetration. So if the high is 161.62, I'd go 161.82, right? Let's let's see, buy at 161.82. Again, same rules apply here. If the market gaps above today's high, if it gaps above, if the first print of the day is 161.63 or higher, this trade is null and void for an automatic buy stop, right? So you wait for the market to open, opens up, it's below this price, then you could put a buy stop in, right? Remember, a stop becomes a stop order becomes a market order once it's touched, and in order for you to use a buy stop order, the market's got to be trading below it, right? Unless it become a market order if it was above it anyway. So those are two potential trade setups. Another one that I like is COPP, ConocoPhillips. Granted, we're well above the 21, as you can see. Obviously, we're trading below the 10 exponential, below the 21. That's fine. That's just short term. Long term is the 200. Look at the overall trend from this low. And look I measured fib retracements. And for those of you that aren't familiar, you know I'm a big fan of Fibonacci retracements. They're easy drawing tools, right? In TradeStation or any software charting package that you use. So I'm taking this low in here. Okay, let's see. Fib tool right here. Click on the low. Drag it to the high, right? Look at that. And we've got the 38.2, right? The 38.2 is right there. The 50% retracement and the 61.8% retracement. Today, market came down, kissed that 38.2, and we've kind of bounced up a little from that. I believe, and take a look at the RSI. Again, I'm a big fan of the 2-bar RSI, not the general default 21 RSI. I like the 2-bar RSI, the 2-bar setting. Okay, so in order for you to change that, you would go in and change the settings. So let me show you here. You're going to format, right? We'll go inputs, right? Look at the length. The length is 2. The general setting on most software programs is 21. There is no edge. There's no statistical edge, in my belief, in my opinion, on the 21. I like the 2 or even the 3-bar RSI. Oversold being under 10. Overbought being over 90, but again, I don't care if it's overbought. If it's over the 200, I'm not looking to short the market. Take a look at the 2-bar RSI today. Well, not today, but the last few days. Literally, we've been flatlining below 10, starting on this day. So again, we've had numerous days below it. We've had 1, 2, 3, 4, 5. This is the 6th consecutive day where we actually got a lower RSI reading. Very unheard of. We don't get that. I believe we are going to get some type of bounce. You could buy the call option. Again, I'd do January. I would just do at the money. So it's 50.08 right now. I'd do $50 call option, January expiration, third weekend, whatever that is. Third week Jan. That's it. I'm going to let you go. Remember, we've got our Microsoft buy call. Just down a couple cents on that still. I'm still looking for some type of bounce. Have a great one. I'll be back with you tomorrow. Bye for now.